AMD's big quarter, the underdog that's taking the AI fight to NVIDIA. Welcome back to Pie Uncut, your deep dive investing in technology podcast, where we break down market stories that shape the future. Today, we're talking about AMD's stunning third quarter earnings report, a story that has Wall Street buzzing and Silicon Valley recalculating the pecking order in the AI chip race. Advanced Micro Devices, the company once seen as the scrappy alternative to Intel, just posted record-breaking numbers, strong forward guidance, and some massive AI partnerships that could redefine the balance of power against NVIDIA. So let's break it down. What happened, why it matters, and what it could mean for your portfolio. Segment 1. The headline numbers. AMD's third quarter 2025 results blew past expectations on both the top and bottom lines. The company reported earnings per share of $1.20 versus Wall Street's estimate of $1.17. Revenue came in at $9.25 billion, beating expectations of $8.74 billion. That's not just a beat, it's a statement, a signal that AMD's transformation into an AI-driven powerhouse is working. And it's not just about this quarter. CEO Lisa Su guided Q4 revenue between $9.3 and $9.9 billion ahead of analyst forecasts. In her own words, our record performance and strong outlook mark a clear step up in our growth trajectory as our compute franchise and AI data center business continue to scale. Segment 2. Where the growth came from. When you look under the hood, the growth story gets even more impressive. AMD's data center division, the segment that supplies chips for cloud computing and AI workloads, generated $4.3 billion in revenue. Analysts were expecting $4.1. That's a big win. The client segment, which includes desktop and laptop chips, also surprised on the upside at $2.9 billion compared to expectations of $2.6. And even gaming, which had been sluggish across the industry, pulled in $1.3 billion, beating estimates by nearly 20%. So what's driving this surge? In one word, AI. AMD's high-performance EPYC processors and its Instinct AI accelerators are being adopted faster than expected, especially by cloud service providers. Lisa Su called this quarter a turning point, and that's not exaggeration. Segment 3. The AI partnerships that changed everything. Let's talk about the big catalysts behind those numbers. AMD's new AI mega deals. First, there's OpenAI. Yes, the same OpenAI behind ChatGPT. Last month, AMD signed a deal to provide up to 6 gigawatts of GPUs for OpenAI's massive data center build-out. In exchange, OpenAI will purchase about 160 million AMD shares, roughly 10% of the entire company. Think about that for a second. The most influential AI company on the planet is buying a stake in AMD. That's not just a contract, that's validation. And it didn't stop there. AMD also signed an agreement with Oracle to deploy 50,000 GPUs across its global cloud data centers. Together, these two partnerships signal a clear shift. Hyperscalers are no longer content relying solely on NVIDIA. They want competition, they want redundancy, and they want choice. AMD is giving them all three. Segment 4. The bigger picture. AMD versus NVIDIA. Now let's zoom out. Even with this phenomenal quarter, AMD's market cap stands at about $418 billion. That's impressive, but NVIDIA's is sitting near $5 trillion. The gap is enormous. Still, markets move on direction, not just size. And right now, AMD's direction is up and to the right. Its stock has soared over 100% year to date, and more than 50% in just the past month. Investors are beginning to see AMD as the only credible challenger to NVIDIA's AI chip dominance. Its new MI450 GPU and rack-scale compute systems, expected to roll out in the second half of 2026, could be AMD's iPhone moment, the product line that transforms it from a challenger into a true platform company. Segment 6. The rack-scale advantage. Let's unpack that rack-scale term. Rack-scale computing means AMD isn't just selling chips anymore. It's selling entire AI infrastructure, systems where thousands of processors are linked together, working as one unified brain. This design is crucial for generative AI models that demand enormous compute power. Morgan Stanley's analyst Joseph Moore said AMD's rack-scale launch next year is the key to its next-generation growth. He added, "It's too early to call market share, but the OpenAI agreement is clearly an accelerant." In plain English, if AMD can deliver better efficiency and return on investment than NVIDIA, it could start capturing real market share in AI infrastructure, not just hype. Segment 7. institutional validation, and government backing. Beyond private sector deals, AMD is also powering 2 U.S. Department of Energy supercomputers at Oak Ridge National Laboratory. The combined public-private investment tops $1 billion. That's important for 2 reasons. First, it gives AMD a seat at the table in the U.S. government's push for sovereign AI infrastructure, systems built on American chips. And second, it demonstrates the company's reliability at the highest performance levels. These supercomputers will run national research programs, not just corporate workloads. For investors, that means AMD's technology isn't just competitive, it's trusted. Segment 8. Market reaction and investor perspective. Immediately after the earnings call, AMD stock jumped 9% in after-hours trading before dipping 2% the next morning. That's typical profit-taking behavior, but the long-term signal remains extremely bullish. The stock has more than doubled this year, and with AI hardware demand expected to grow exponentially through 2026, many analysts now view AMD as a multi-year compounder, not a short-term trade. But there are risks. The company's success depends heavily on hyperscalers like OpenAI and Oracle actually following through with their GPU deployments. And while AMD has matched NVIDIA in performance metrics, NVIDIA's software ecosystem, CUDA, TensorRT, and its AI developer stack remains a fortress. So the battle isn't just about hardware, it's about the entire AI platform. Segment 9. What it means for investors. For investors, the takeaway is straightforward. AMD is no longer just a CPU company. It's becoming a full-stack compute powerhouse, spanning cloud, gaming, and AI acceleration. At today's valuation, still less than 1/10 of NVIDIA's, AMD represents both a growth story and a catch-up opportunity. If the company executes on its MI450 rollout and deepens partnerships with hyperscalers, it could realistically double its data center revenue again within the next 2 years. But patience is key. The AI build-out is a marathon, not a sprint. And while volatility will come and go, the structural demand for compute power, for every AI model, for every digital twin, for every autonomous system, is only going higher. Segment 9. The final word. Lisa Su's AMD is not chasing NVIDIA's shadow anymore. It's building its own light. This quarter's results prove that when it comes to AI hardware, there's room for more than one winner. AMD is no longer the underdog. It's the challenger shaping the next chapter of the AI revolution. So whether you're an investor watching the numbers or a technologist tracking the architecture, remember this. Competition fuels innovation. And right now, AMD is igniting a new era of it. That's all for today's episode of PyOnCut. If you enjoyed this deep dive, follow and share it with a fellow investor who's watching the AI space. Until next time, stay curious, stay disciplined, and as always, invest with purpose.